Trade planning with options. Katie's going to share analysis on light crude, which is short-term negative. And she talked about a key level where you could enter on the shorts side, and that was actually hit today. You're going to find this really great. She's going to illustrate putting on an option trade using Tasty Trade. Katie, please show them this great analysis.
Hi, this is Katie with askSlim, and this is a trade planning with options video on August 24th, 2023. Today we're going to look at a defined risk long premium trade idea in crude oil futures. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. Let's get started. Here is the weekly chart of light crude futures, symbol /CL. We have a very large 78 bar cycle showing the dominant money flow pattern, and that is broken into minor thirds of 26 bars, and those are further broken down into minor halves of 13 bars. Those are harmonic families. Now, these are a drawing tool, but you can see how the actual cycles played out up above. They're outlined here in blue. Very clear patterns. So what you'll notice now is that next week we're going to be entering the weekly cycle timing window. That's a period of time shown by these blue vertical dashed lines. It runs from August 28th to October 6th, and that is a period of time when we expect this cycle right here to pull back and make a low before moving up again into the rising phase of the next cycle. Now, the current cycle looks as though it will be positively configured, meaning it will likely end higher than where it began. And it also has a right-hand translation, meaning that the cycle peak came over here on the right-hand side near the end of the cycle, leaving less time for a pullback. Now, these are bullish conditions. Slim has a notation down here that this is a base. So that is a positively configured cycle that occurs after one or more negatively configured cycles. So this suggests that the subsequent cycle is likely to take out this high, and you can see our projections over here. So we're looking for a short-term pullback and then up again. Now momentum is positive in here with our proprietary momentum indicator, the reversal scout. That is this green and purple ribbon. It is still green. It's beginning to curl over just a little bit. Now again, the ideal cycle timing window dates are August 28th to October 6th. Let's switch over to the daily chart. Here on the daily chart, notice that we have just passed through this daily cycle timing window. It ended on August 17th. We believe crude oil made a low here and then began to move up, but has broken down already. That would make sense because this current daily cycle is in sync with the weekly cycle timing window. What does that mean? Well, this daily cycle is due to end between September 27th and October 5th. That fits within that weekly cycle timing window. That's what it means when we say they are in sync. And those cycles in any symbol are expected to exhibit weakness and possibly even breakdowns as we form that intermediate and short-term low. So although this could be a late low forming, the more likely scenario is that this is exhibiting the weakness and breakdown that we are expecting to see in this cycle. Momentum has turned negative in this time frame with the reversal scout purple, and the slim ribbon has gone from positive to neutral. Now, if this is a left-hand translation and breakdown, then we would not expect crude to take out this high right here, the high of that candle at 81.75. So what we're looking for now is for crude oil to bounce up into this resistance zone. It runs from about 79 on the bottom to 80 on the top, with this 78.6% fib at about 81. If crude oil gets back above 81, that will cause us to reevaluate the trade idea. So what I've just shown you on those two charts is highlighted on one of our askSlim tools called the Cycle Low Timing Tracker. Notice that /CL is located down here on the bottom right in the in sync box to show that the current daily cycle fits within that weekly cycle timing window. It's also shown over here in the late breakdown box for the daily time frame to show the possibility that the daily cycle is running late. These gray boxes on the bottom represent uncertainty. However, the longer that crude oil continues on the downside, the greater likelihood that it's a breakdown, especially since it's also in the in sync box. Now we're going to go over to Tasty Trade, where I'm going to demonstrate a bearish options trade idea to take advantage of this bearish hypothesis going to the end of September, beginning of October. But first, go to the askSlim homepage, hover over that Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more about our preferred options trading platform. If you choose to open an account with them through our link, that helps you with some special bonuses, and it also helps us, so please consider doing that. Now over to Tasty Trade. I have crude oil loaded in here, symbol /CL. We mentioned the late September, early October time frame. None of these available expiration cycles fit perfectly, so we're going to use this September 15th expiration cycle. Also, note that IV rank is very low. That would suggest a long premium trade idea which will benefit from an increase in volatility. Now, as I mentioned, if we are exhibiting a left-hand translation and breakdown, we wouldn't expect crude oil to make it back up over 81.75. So I'm going to demonstrate a put debit spread. Now keep in mind that we are waiting for a bounce up into the resistance zone, so the strikes may be different at the time that we activate the trade. But if we were entering this trade right now, we would buy an in-the-money put, let's say the 79 put, and then we would sell an out-of-the-money put to reduce our cost basis. You can go as far away as you like, but I am going to sell that 78 put. Now, this is a $1 wide spread, but the notional on crude oil futures is 1,000. So this $1 wide spread is actually worth $1,000. The debit paid shows 47 cents. Multiplying that by 1,000 means you're paying a debit of $470. That's also your max loss and capital requirement. Max profit then is the difference between that and the $1,000 that the spread is worth, so in this case, $530. The probability of profit is right around 50%. Now here is the risk graph. With the profit zone in green, we want crude oil to move lower. Now, again, the best time to place this trade is on a bounce up around that $80 range, and then a signal on the lower time frame chart, say the 2-hour chart, showing momentum shifting back to the downside. So that's our trade planning with options video today. As always, please feel free to reach out on Discord or via email to katie@askSlim.com if you have any questions or feedback.